Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, July 25th, 2019. I debated whether or not to even do one. We didn't have any significant developments once again today, but we had a lot of big reports after the bell. I'm going to comment on those in a second. We'll take a look at the futures, and then more importantly, I'll get this out, what levels to watch going forward. We had a down day. In fact, the Nasdaq 100 was down. QQQ was down 1%, and in the broad market, the S&P was down 0.5%. But again, it didn't do anything technically significant. There are these little trades to be made. And that's where I said, if any money to be made in the market, it's sort of like squeezing water from a rock. Traders flourish on volatility. Swing traders do. The VIX now is at back toward the low end of its range. Volatility is compressed. These little small candles, and the best you can do is look at these little short-term trend lines. I'm here on a 60-minute chart. As I showed you this one yesterday, you have the downtrend line on the SPY. You get a breakout. We came back, tested the breakout point, had an uptrend, so there was a swing trade there. And then you had the uptrend line here, and then that broke today. So there was a trade to be made there. Same story on QQQ. You broke that minor uptrend line that I'd highlighted, and little move down. And again, if you're trading futures or you're leveraging up and you're day trading or actively swing trading, you can make a little bit. But I continue to maintain the money right now elsewhere. For example, let's look at this. This morning in the charts I'm watching for members, I mentioned several things that I was watching, look for trading ops, and silver was one of those. That silver was back testing. It broke down below this bullish falling wedge. I'd been long and bullish on silver this whole run up, talking about a silver poised to play a game of catch up to gold, and that's exactly what happened. So silver has greatly outperformed, and the silver miners. But as an active trader, mentioned, I closed out my silver long and I reversed this. I took a short trade, and just from where it was posted here today, that point at 16,620, it dropped down to my first target. As I said, 13,335. Hit there, reversed. We say cover a little bit above the actual resistance levels, and that was good for each single contract in SI was good for $1,400 from that alone. And then I went on, we hit that level, said, good time to reverse. It was a quick 1.7% gain, and I played a bounce up there, and then this is how it looked, and got out of that right near the top. As I mentioned doing the video today, I just trailed my stops up, and that took me out right near the highs. So that you take that 1%, add on another 1.7, add on another, I don't know, 0.5% or more, add to that. So that's where the trading ops are. You don't see the market going down 1.7% and then reversing right on cue in a single day. So this day trade alone has been more profitable than most of the day trades on the markets, even that RTY IWM trade yesterday. But as we, the public videos, we stick to the broad market coverage. So this is what we're looking at now. This is the 60-minute chart of QQQ through the end of the day. We're going to look at the futures here in a second, and I'll comment on that. Nothing's changed. If you haven't watched the recent videos, just watch one of the recent updates where I cover the daily and longer term charts. So again, I could sit here and look at these all day long and tell you that although we dropped 1% in QQQ and 0.5% in SPY, absolutely nothing's changed on the chart. So let's look at the futures, try to gauge what levels to watch and where we might be going from here. All right, so here's NQ. All the lines zoomed in. This is a 60-minute chart of the Nasdaq 100 futures. In yesterday's update, I mentioned, we just continue to wedge higher. The divergence continues to extend, which still leads me to believe that, an impending trend change, meaning a correction, is likely as long as those divergences are still there, and they still very much are. So the trade, from there, we had that divergent high, and again, there was that minor trend line break I just showed you before on QQQ, and we fell right to that 1720 support. That's the same level it's been on this chart for a while. So you can trade off these levels, and you can see what the futures are doing in after hours right now. We had 3 of the big 4 companies reacting positive to earnings. I'll get to those in a second. One of those, the biggest one, being Amazon, down. So it's kind of the 3 so far led to a pop. We had an initial leg down, and you can see capped right at the resistance lines. Again, these were all the levels covered yesterday. So here's how you can actively trade. Now, what the takeaway is, if you're not a very active trader, this is our pretty big support. You can see all the reactions on here so far. A lot of reactions here, reactions here. When we broke it, we didn't limp down. We moved very impulsive. That impulsive selling helps to validate the importance of that level. We gained it again with an impulsive break through it, but once we broke it again, boom, an impulsive move down. Gained it here, tested, 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 tested. So it's a level. It's been traded through, but the way it was traded through and all the other reactions tell me that that's a pretty big level to watch right now. So if 79.20 goes with conviction, then that should open the door up for probably give us that finally a big move down. Now that we've had some of the major components of the Nasdaq 100 reporting, we still have Apple coming up next week, so it's not all over. But at least now we have Microsoft, Amazon, Alphabet, Facebook. So we have 4 of the 5 FANGs are out of the way, and one left to go. Anyways, those are the levels to watch. Look at ES real quick for you ES traders. There's this comparable trend line. There's the most recent divergent high, kind of impulsive, somewhat impulsive selling so far off that high. But again, we're kind of living in this little world of these small ranges. It looks like a lot, but it's really just kind of more noise, if you will, within this recent trading range right here. And what SPY or ES in this case, the S&P 500 futures need to do to give us a decent sell signal is to break the bottom of that recent range. Really, this we'll call this a support zone right here. This level between 29.74 and 29.55. So I think that needs to go to really get the selling going and start to see that good old-fashioned kind of correction mode that we haven't seen for quite a while now. RTY, that I should cover that too, since I talked yesterday. That was my focus. We had the small caps. They overshot that 1582 target, and on what I refer to, I call it a momentum fueled overshoot. When you have a near vertical trajectory, that tremendous velocity momentum going in to a resistance level, even if that level is going to prove to act as resistance, be the stopping point, you're going to overshoot it. The analogy I always use is a pitcher throwing a 92-mile-an-hour fastball. It's going to hit the catcher's glove, and it's not going to stop there. The glove's going to snap back and then come back forward to the point that the ball hit the glove. That's what a momentum-fueled overshoot is with in trading. So the target was hit, and then we actually came back. I stepped in. I tried to catch. I thought we'd get a bounce trade. I had a short going in here to reverse off 1573. The reaction was very minor, so I got stopped out on that one, and then I just let it go after that point. But either way, you can see that that's it. These are just quick, short-term trading ops, and you got to hit them while you can. You got to get in, get out. There was that nice, clean, bullish falling wedge breakout, and so the markets are acting well to the technicals, at least IWM lately. And again, on a very short-term time frame, so are the large caps. But you just have to be a very active trader, go in for small profits, get in, get out. That's all this market's given anybody lately. And so now IWM or RTY, the small cap ETF, is smack back into the middle of this trading range that it's been in for a while. So let's say I really don't have much of an opinion on where it goes from here, but I still think that in the coming weeks here we're going to see a pretty good correction in the broad market. And if so, we just need to get those sell signals. We need to see those support levels broken. We need to see some big red candles on the daily, not these little tiny candles. Some big red candles that smash through support and some impulsive selling. Otherwise, we're just going to continue to be locked in these summer doldrums. And that's that. Now let's just look at what's going on in after hours. Okay, let's see. I'm doing this on a big 32-inch monitor. I have to go down. I don't have more charts than I can cover on these YouTube videos. But here's a Mosaic of streaming charts. If I can move this thing down here, yeah, I can capture most of them. I'm missing NQ right now, but here's what I wanted to focus on. I've got a lot of charts on this page right here. Here's Amazon. This is by far, remember Amazon, I told you that the 4 big components of the Nasdaq 100 reporting today, which were Amazon, Alphabet, Intel, and Starbucks. They collectively make up about 23% of the returns of the Nasdaq 100. However, Amazon makes up around 10% or so. So it dwarfs out. So what's going on is people like what they heard so far from Starbucks. They like what they heard on, that's Expedia. It's another one reporting. They like what they heard on Alphabet, and they like what they heard on Intel so far. Now, I want to say this, and I say this every time there's an FOMC announcement, but more importantly when there's earnings. There's two components to an earnings report. There's the earnings report, what they made, what their profits, losses, the earnings per share, everything that happened last quarter. Then there's the conference call with most companies. Most will give guidance and then expand. And I can't tell you how many times I've seen a stock go one way, let's say up, only to come down and sell off very hard later in the after-hour session or the next day. So I wanted to point that out, that I don't take a whole lot into what happens on it's same thing with the FOMC announcement. It's not the initial reaction that matters, it's the lasting reaction. Wait till the conference call's out of the way, and then most importantly, wait till the big players step on the field tomorrow, the starters, at 9:30. That's when the institutions come out to play. They can't move in the after-hour session. It's very difficult. There's not a liquidity. It's much harder. So for the most part, there's always exceptions. You'll see this is a lot of retail traders playing around, and maybe some smaller institutions, but the big ones will come out tomorrow. So that's that. And futures, well, here it is over here. Let me slide this over. There's another. Down here in the corner, right-hand corner, you can see what the NASDAQ futures are doing, NQ. And so far, knee-jerk down, knee-jerk up, could go either way. And again, I'm not going to read too much, and this is all just noise right now. Let the conference calls get out there and the guidance, and then most importantly, let the market absorb everything that's been said, because that takes a while to really get processed and absorbed. So I gave you levels to watch tomorrow. And just to recap on the daily charts, if you don't want to get tied up in the world of the 60-minute charts, and I get that, not everybody is an active trader. This is kind of the big level here on SPY, about 294. We had the previous highs back here from 2018 before the big drop. We came up, tested them again, failed, came back up, finally broke out. And so right now we have this little area, what I call a very lackluster breakout. And the reason, again, that I believe it'll fail, a couple reasons. Breakouts that occur on below average volume have a much higher rate of failing. You can see volume tapering off. It's simply a sign of non-confirmation. It's not a guarantee that that breakout can't stick. Some low volume breakouts do stick. However, those on that don't occur on 1.5 times or better average volume tend to have a higher rate of failing. And then the other thing, of course, is breakouts that occur with negative divergence, or new highs that occur with negative divergence, just like this new high, all-time high at the time here in SPY. Those that occur with both negative divergence and overbought tend to have a much higher failure rate as well. So nothing has changed on an intermediate or longer term outlook. That's that. We just need to kind of get going. We need to get some sell signals, and of course, like I said, a solid break below 294 will certainly help. That's not a be-all end-all, as would a move back down below 191.46. That's a little bit closer on QQQ. Again, we're here on the daily chart. You can see QQQ had these double top and divergent high there. Again, divergent high, divergent high, divergent high, and we know what happened the last time we had divergent highs. I don't see why any reason why this will be any different. We just need to get some sell signals here, and again, so look for a break of that 191.50-ish level. That will be a move back below the recent highs and give us a failed breakout as well, especially if you get it with SPY. Next level to watch, those highs back from 2018, wherever they come in around 180, 189 or so, that would certainly help as well. And then if that starts to happen, I'll turn my focus back to the weekly chart, which again, nothing's changed there recently because we've just kind of been compressing here. So that's it right now. Futures are up, not up, I'm sorry, they still haven't regained all the losses they had earlier today. They've had a little pop since those companies reported, but again, a lot can and probably will happen between now and tomorrow. So we'll pick this up, and I will definitely do a weekly closing market wrap tomorrow at the end of the day. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.